the stock market basically once again trading at all-time highs, it's starting to become harder and harder to find deals within the market as far as positions to add to your long-term portfolios. And even though lots of positions aren't necessarily on sale right now, if you dig deep enough, there are still some super high quality dividend growth stocks that could be offering a great buying opportunity as of right now. And in this video, we're going to go through 5 specific stocks that are currently undervalued still with the market being up so much. So if you want to learn more about these different individual stocks that could be on sale right now, stick around, drop a like down below, and let's get right into the first one. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first stock that could be offering a great buy and hold opportunity as of right now where it's trading currently is Pfizer, ticker symbol PFE. Now, Pfizer is currently trading around $27 and some change per share. Pfizer is also offering a massive starting dividend yield of over 6.1%, which is the highest starting dividend yield we've seen Pfizer offer in several years now. Now, as far as Pfizer's price performance long term, the stock is up over 490% on the max time frame, although ever since around late 2021, this stock has basically fallen off a cliff, and at one point Pfizer was trading upwards of $60 per share. But with Pfizer being beat up so much in share price, it is offering a nice starting dividend yield with honestly a pretty impressive track record, 13 years of consecutive dividend growth, and on top of that, 34 years of consecutive dividend payments. Now, Pfizer also has a steady cadence of raising their dividend every year or so. And to give you an idea of how much Pfizer's raised their dividend over the last decade, we're talking a quarter per share per quarter. And as of right now, the most recent quarterly dividend that was announced is 42 cents. So some decent dividend growth there, especially if you are able to grab some shares of Pfizer with a 6% plus starting yield. Now, on top of that, Pfizer is offering a 75 on the dividend safety score, so this dividend should be relatively safe unless something else happens. And lastly, Pfizer has a 0.44 beta, meaning that the stock is very low beta and is going to keep your portfolio pretty tame. The next single stock that I have a huge position on that could still be offering a buying opportunity currently is Verizon, ticker symbol VZ. Now, Verizon has been beat up like crazy over the last year plus, and although Verizon has recovered a little bit, it's still trading below 40 per share at $39.51. Now, Verizon is offering a 6.73% forward dividend yield. And although there are some skeptics saying that Verizon's dividend is not necessarily all that safe, it still does have a 70 on the safety score. And with Verizon paying dividends for over 40 years without an interruption and 17 years of dividend growth, I think Verizon's dividend is here to stay, but of course only time will tell. Now, Verizon, along with the other telecommunications stocks, has had a rough decade, honestly. Even during the good times, Verizon hasn't really done all that much as far as share price goes. I bought a lot of shares of Verizon a while back personally because my thought process was that Verizon, even though it is telecommunications, is probably one of the most stable telecommunications that does have some growth ahead. But with some of the issues that Verizon has faced over the last year or so, along with all the debt, Verizon has definitely struggled. But for the investors out there that think Verizon might have a comeback story sometime soon here, along with investors that want a massive starting forward dividend yield and a stock that historically has some pretty significant dividend growth long term, Verizon definitely is a stock to look into. The next single stock that's definitely still on sale, in my opinion, is ticker symbol O, Realty Income. Now, Realty Income is one of my largest single holdings across my entire 7-figure portfolio. Realty Income's dividend is relatively safe, and 80 on the dividend safety score as far as Simply Safe dividends goes. Now, Realty Income has a 5.82% forward dividend yield, which is massive, especially if you look at Realty Income's dividends over the past, say, 5 or so years. There's very few times historically that investors have been able to grab shares of Realty Income and have well above a 5% starting yield. Now, along with it, it's not just that. Realty Income also does have some pretty significant dividend growth, especially for a single stock that already offers a nice juicy starting yield. Realty Income has 29 years of growth and 55 years of paying dividends without a reduction, and over time, as Realty Income has just become larger and larger, I've enjoyed stacking more and more shares in my portfolio for the long term. Not to mention, I personally do think that Realty Income does have growth potential as far as share price goes. I think Realty Income will be trading above $60 within the next year and maybe even 70 within the next few years. Realty Income, in my opinion, in the next few years will hit an all-time high. So I'm more than happy to grab shares of Realty Income, and I think it's still on sale as of right now. Another dividend stock that I think is somewhat on sale, maybe not the best deal of all time, but is definitely offering a deal relative to the past 5 or so years, is PepsiCo, which has a very safe dividend and a 93 safety score. Also, Pepsi offers a 3.32% forward dividend yield, and we all know Pepsi has a history of raising dividends very, very fast. Now, I personally purchased shares of Pepsi a while back, and although Pepsi has dipped like crazy, I'm still up a little bit on my shares, but maybe more importantly, Pepsi has paid me juicy dividends every single quarter since I've held on to it. Now, for those dividend more income-focused investors out there like myself that love getting paid dividends and also that love dividend growth, I mentioned that Pepsi has a history of raising their dividends pretty quickly. Over the last 20 years, 11% per year, which is insane. And to show you some of the actual numbers, $5 per share was paid last year for every single share of Pepsi that someone owned. Now, 10 years prior, Pepsi was paying around $2.20 per share per year, so last year investors got paid basically double that of what they would have got if they just held for 10 years. Now, of course, only time will tell, and there are some skeptics that think some of the main growth that Pepsi had is at this point behind them because the company is so big and so bogged down now. But I'm still considering grabbing some more shares of Pepsi, maybe if it dips a little bit lower than it is currently. The last single stock that's been in and out of my portfolio over the last, say, 5 or so years that is still offering a buying opportunity and is relatively speaking on sale is LMT or Lockheed Martin. Now, Lockheed Martin is of course an aerospace and defense company. Normally Lockheed Martin does offer somewhere up around a 3% starting yield, at least you can see historically, but with Lockheed currently trading in the 430s, it isn't the best deal of all time, but could still be offering a decent starting deal for those investors that want to get in. Now, some of my favorite parts about Lockheed is the fact that the stock is very low beta. And like I said, I've personally held this stock in my portfolio, and I've enjoyed the fact that most of the time the stock has went up in price, but also just important, Lockheed Martin offers dividend growth at a very, very fast rate. Now, to give you an idea, just last year, Lockheed paid around $12.40 or so per share per year. Now, 10 years prior to that, we're talking around $4. Meaning that in the last decade or so, this stock has paid about 3 times as much on a yearly basis if you were to just hold on to the shares. Also, I forgot to mention, Lockheed does have an 84 in the safety score, so this stock offers a dividend that's just about as safe as anything, with 21 years of consecutive increases and 31 years of paying dividends. Lockheed is definitely a stock that you should keep your eye on, and for me personally, if it dips below 400, it's probably going to find another spot in my portfolio. So there we have it, guys. Those are 5 different stocks that are currently still undervalued compared to the past 5 or so years of what they've been trading, at least in the market currently, even with the market basically being at all-time highs. Now, as the market has continued to go up, it has been harder and harder to find screaming deals across the market. But for me personally, I just normally stick to the same stocks, same ETFs that I really like, and I just consistently buy them on a daily basis, not really worrying too much about price. Now, of course, when certain stocks or ETFs are on sale, it might be more tempting to maybe grab a little bit bigger of a position, for example. But either way, I think that buying into high quality stocks that match what you're looking for your strategy, for your portfolio, whether or not a stock is on a screaming deal or not. But lastly, now I want to hear from you guys down below. Out of all 5 stocks we went through in today's video, which is your #1 favorite? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.